Think the US-China trade war 2025 is only a problem for these two countries? Think again. This conflict is reshaping the global economy, and you won't believe who's really cashing in on tariffs, inflation, and disruptions in supply chains. Curious about who's really profiting from tariffs, inflation, and global supply chain disruptions? Let's dive into the first episode. You won't believe what's coming next. Welcome to Cashkeys, your go-to channel for in-depth and easy-to-understand analysis of global economic issues. Here, we break down the impact of major events like the US-China trade war 2025 and help you uncover investment opportunities. If you're looking to stay ahead in the ever-changing world of finance, don't miss a single episode. Keep watching to discover insights that will give you the edge in today's financial landscape. The US-China trade war isn't just causing losses, it's transforming the global economy. You've likely noticed rising prices, companies struggling with tariffs, and US consumers paying more for everyday essentials. But that's just the beginning. So, who's really profiting from the chaos of this trade war? Everyone talks about the damage. But here's the truth. Some countries, companies, and investors aren't just surviving, they're thriving. Let's dive deeper and see who's really benefiting from all this. As the US-China trade war escalates, some countries have quickly seized the opportunity. They have not only replaced China in the supply chain, but have also risen to become key players in the global market. But what makes Vietnam, India, and Mexico stand out in this race? Vietnam is rising fast. As global companies leave China, Vietnam has captured a massive share of the market. In 2024, its GDP grew 7.09%, driven by manufacturing and exports. Apple and other giants have already moved a major portion of their production here. The reason? Vietnam offers a cost-effective alternative, free from the burden of US tariffs on Chinese goods. But this shift isn't just about low-cost labor. Favorable trade policies and booming domestic demand are giving these nations an edge. With exports rising 15% over the past 2 years, Vietnam has positioned itself as one of the fastest-growing economies in Asia. These nations are gaining now, but for how long? Can they really hold this advantage, or is this just a short-term shift before China regains its footing? However, is this growth sustainable? As more companies flock in, will these countries face capacity overload, or can they maintain their long-term competitive edge? These nations are taking strategic steps, altering the way the global market operates in ways that few anticipated. Beyond Vietnam, India also stands out by shifting its production strategy. Apple, for instance, has moved much of its production from China to India, taking advantage of lower labor costs and a rapidly growing consumer market. In the fiscal year 2023 alone, Apple's revenue in India increased by nearly 50%, reaching almost $6 billion USD. But are these companies truly changing the world for the better, or are they simply exploiting the chaos to boost their own profits? The numbers might say it all, yet the ethical dilemma remains a major question. The trade war between the US and China is not merely a battle over commerce, it is also a struggle for political power. Both nations are using this conflict as a tool to control their economies and expand their global influence. But do we really see the whole picture? In 2025, the US imposed a 10% tariff on Chinese goods valued at $370 billion USD, significantly impacting numerous industries. In response, China levied tariffs on US goods worth approximately $14 billion USD, while also ramping up investments in artificial intelligence and telecommunications, aiming to become a leader in these fields. So, as countries and companies adapt to these changes, the real question is, who is truly controlling this trade war? Is it the US or China? Could this conflict be merely the surface of a larger strategic plan that we have yet to fully understand? While some nations and companies are thriving, many others are facing harsh realities. So, who's really paying the price in this trade war? While the average person may face disaster during a market crash, big players are cashing in. Hedge. Funds like Renaissance Technologies capitalized on discounted stocks during the downturn, raking in massive profits as the market quickly rebounded. In Q1 2024, hedge funds focused on volatility trading saw massive gains. Their average return was 12.5%, far exceeding the S&P 500's 6.2% growth. As market instability grows, institutional investors are adjusting their strategies. Many are shifting capital into sectors less exposed to China, seeking safety amid the uncertainty. Regardless of how volatile the stock market becomes, large hedge funds continue to secure significant profits. But is this simply smart investing, or are they taking advantage of market fluctuations to maximize their gains? The irony is undeniable. What is a catastrophe for ordinary people becomes a gold mine for those who can bear the risks. This trade war, while posing challenges for many, also creates massive opportunities for major players and strategic investors. But what if the trade war is just the beginning? What if the real battle is about AI, tech, and global dominance? Stay tuned for part 2, where we'll reveal what's really at stake. As the US-China trade war 2025 intensifies, not every business can take advantage of the emerging opportunities. While large corporations have the flexibility to shift their supply chains and capitalize on new opportunities, small and medium-sized enterprises, SMEs, in both the US and China are struggling to stay afloat. Soaring tariffs, rising production costs, and the unpredictability of global markets are making it nearly impossible for these businesses to remain competitive. This clearly shows the impact of the trade war on global supply chain disruptions, inflation, and tariffs, which are increasingly affecting the US economy 2025. It's truly heartbreaking. Thousands of small businesses, some of them long-standing, are fighting to survive. Meanwhile, large corporations can easily relocate their production to regions with lower costs. Take, for example, a small electronics manufacturer in China that was forced to close because it couldn't sustain the high production costs caused by US tariffs. This is just one of countless SMEs that are being squeezed out, unable to absorb the financial strain caused by the ongoing trade tensions. The ripple effect is also felt by American consumers. Imported goods, like a TV from China, have gone up by $300 in just 1 year. And it's not just electronics. Everyday items from food to clothing are seeing significant price hikes. According to recent data, consumer expenses for the average household could rise by 5 to 10% compared to previous years. This is forcing many American families to reevaluate their spending, especially when their budgets are stretched thin. Meanwhile, the S&P 500 and NASDAQ have experienced heightened volatility. Tech stocks have dropped an average of 8% following the escalation of trade tensions. This uncertainty has led major investors to diversify into alternative markets, further reshaping the global economy. When both large corporations and small businesses are under pressure, it's the American consumers who bear the brunt. They have no choice but to absorb higher costs for essential goods. While large corporations may have the resources to weather the storm, the average consumer is facing the harsh reality of rising prices. Is there any solution to ease this burden? Or will the trade war continue to put strain on everyday lives? Will these rising costs and market disruptions become the new normal? This remains one of the most pressing questions in the context of US-China Relations 2025 and China Retaliation 2025, as we continue to witness stock market reactions and debates on will tariffs raise prices every day. The road ahead remains uncertain, and the full impact of these economic shifts is yet to unfold. As we have seen in Episode 1, the US-China Trade War 2025 is not merely a showdown between two superpowers, it's a strategic game for those who know how to turn uncertainty into opportunity. While some nations and corporations thrive by adapting, others struggle to survive. The question remains, can these winners maintain their advantage in the long run, or is this just a temporary shift amid a global storm? We've only scratched the surface. This isn't just about trade, it's about power. Some are playing a much bigger game, one that could reshape US-China Relations 2025 for decades. What if this trade war is just a distraction? What if the real fight is happening somewhere else, on a battlefield of AI, technology, and economic control? If you found this video useful, don't forget to hit like and share your thoughts in the comments below. Who do you think will be the next to benefit from this trade war? Make sure to subscribe to Cashkeys so you won't miss Episode 2, where we uncover the real power struggle behind the trade war, from China's strategy against tariffs to the stock market reaction and the hidden battles shaping the US economy 2025.